The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, joining us now on the program, we are discussing the expansion of crush and U.S. soybean processing. A new report out from CoBank is looking at some of the risks of an industry overbuild here. We're going to talk about that and more. Joining us now, lead grains and oilseeds economist with CoBank, Tanner Emke, is with us here on the show today. Tanner, good to talk with you again, sir. Hope you're doing well.
Likewise, Jesse. Thanks for having me back. It's always a pleasure to be here.
Well, let's talk a little bit about this new report you guys just released here a few weeks ago, as we've continued to talk about this boom of renewable diesel and crush capacity and all these new plants that are coming online here across the country, and really just set this up for us, Tanner, as you guys kind of looked at some of the risks here of maybe going too far, so to speak, with some of our buildup. So can you give us just kind of a quick overview of what you guys found with this new report?
Yeah, well, we worked with our customers that are building in the space, and there's always been this talk about what you talk about, the risk of overbuild, because so many of us lived through the ethanol build out. Back, it's a short time ago, but it seems like yesterday, but it's been over 15 years now, in the late 2000s. And everyone's calling this ethanol 2.0, that we're going to see the same thing happen in soybean crush like we saw in ethanol, where the space was overbuilt. You had a lot of undisciplined capital come into the marketplace. Farmers didn't have deep enough pockets for some of the ethanol plants that they invested in. You had some outside money that is not accustomed to the swings in commodity markets that came in to invest in ethanol, and the space quickly got overbuilt. And we saw so many of those plants, unfortunately, get liquidated at pennies on the dollar. And now everyone is thinking that's exactly the same thing that's going to happen here with soybeans or with soybean crush. We have we think something similar may happen, but it's not going to be the same. First of all, the balance sheets of the folks that are building out the capacity in soybean crush are very, very strong, Jesse. After a couple of years of record large, record large crush capacity, crush margins over the last couple of years, balance sheets are healthy. And we just don't see the likelihood of a correction happening this year or next year. On that note, I do want to point out crush margins have come back really in a big way over here this past year, and we have now come back to something that is closer to the historical norm. And so that inevitably is going to mean that that's going to have a negative impact on the ability for a new plant to cash flow. These new plants, remember, are built at a much higher cost than plants in the past. The borrowing costs are significantly higher. The raw material costs for concrete, for steel, for aluminum, all those raw materials are sharply higher. You have labor costs are sharply higher. So to build a new plant today is no longer going to pencil at the low level at the crush margins that we had in the past. And so now the question is, okay, if you did build a new plant at these sharply higher costs, how long can you last at a crush margin that is now come back to earth? The crush margin of today is not what it was a year ago. And so that starts this question of, okay, who is going to be rationalized? What assets are going to be rationalized? We don't think that's going to happen here first in the United States. We do think it's going to happen, but we think it's going to first happen in Argentina. That's where you've got a lot of crush capacity that has been idled over the past year because Argentina had a terrible crop last year. And those crushers down there are struggling. At the same time, there's a new government down there in Argentina and is contemplating raising the export taxes on soybean product exports, specifically meal and oil. And that would be a terrible headwind for those crushers. So they are the ones that are the most vulnerable at this point in time. Okay. You're not going to see crush capacity idled in China. They're going to make sure that those plants where most of the soybeans are crushed in the world are going to remain operational. They want the beans and the meal and the oil and the jobs. We don't see Brazil coming offline anytime soon. Same thing there. Their balance sheets are strong. And of course, like I talked about here in the United States, our balance sheets are very strong. So the most vulnerable crushers really, Jesse, are down in Argentina. That doesn't mean we don't have risk.
Yeah.
There are some plants, as we point out in the paper, that we would be concerned about. It's going to be those plants that are called destination plants, the ones that are located outside of your main soybean growing regions that are going to rely on transportation to import soybeans to their local area. And that's another layer of cost, another layer of risk, because transportation costs can be volatile. They can rise on you. So there's another layer of risk there for destination plants. We're concerned about plants that are in areas that are experiencing some overbuild, where you're going to have crush capacity in a small area or a local area where you're going to have plants bidding against each other for soybeans. And then what happens if we're in a short soybean year and you have an export bid show up from China? All of these things now are going to be working against those plants that are already in competition with each other, and so their basis is going to be reflecting that, and their cost of soybeans is going to be much higher. That's an obvious win for the farmer, but for the crush plant, that's another layer of risk. And so we talk about that in the paper. Those are really, in the U.S., those are the two areas that we'd be concerned about. And of course, management is important. What is the quality of the management? Who is the money behind the plant? Okay, are they disciplined capital? Do they understand the cycles that we experience in agriculture? Are they patient capital? Do they know that we have these boom and bust cycles, and during the bust cycles, are they ready to stand there firm and deep, reach into their pocket and pull out more money? Are they going to be there? How deep are the pockets, and how deep is their patience? Really, is the question, really. So those really are really the three things that we outlined in the paper: is where are the plants located, what is their local competition for soybeans, and who is behind the plants? Are they disciplined capital, and do they have the capital behind them to carry them through low margin periods?
Tanner, another piece that I don't think is talked about a lot here, but I'm curious your thoughts on this. What about competition from imports of other vegetable oils, palm oil, canola-based oils from other countries? I think that's another piece that we have to consider here as well.
We addressed that in the paper about the risk to the crush margin. If you haven't been watching the news, we've got record imports. Veg oil imports of all kinds are flowing into the United States. Canola oil imports are record high, and Canada is building out their crush capacity to meet the rising demand for veg oils. And so we can anticipate more canola oil flowing in from Canada in the years ahead. Palm oil flowing into the United States at a record large amount to backfill the demand for veg oils in the United States that's left vacant by soybean oil. Palm oil is not supposed to be used for renewable diesel because it would contribute to the destruction of rainforests in Southeast Asia. But at any rate, those imports are record high and flowing into the U.S. Then you got used cooking oil, very controversial there, coming in from China. Is it actually used cooking oil, or is it just palm oil that they heated up? And they're able to capture that credit by selling it to the United States as a processed or a used cooking oil. So those imports are record high, and that's competing with soybean oil processed here in the United States, or crushed the soybean oil created here in the United States, and that's depressing soybean oil prices, and that's going to be impacting the crush margin. And that's ultimately going to be flowing down to the processor bid in your local area. But right now, as expansion continues to grow in the United States, there's a positive story here, I think, as renewable diesel demand continues to grow. That's going to put upward pressure on demand through this growth period for all veg oils, soybean oil included, and that's going to put a firmer floor under veg oil prices. That's the short-term view here. Remember, we're not the only country, Jesse, that has a renewable fuel program. You got Southeast Asia doing their own programs. You got Brazil doing their own programs. Other countries around the world are going to be pulling veg oils off the market. So over time, you're going to see that demand for veg oils continue to rise, not just here in the United States, but around the world. That's going to create scarcity, and that's going to create higher prices.
We're talking with Tanner Emke from CoBank, talking about the expansion of U.S. soybean processing capacity. And you can find the full report on the Knowledge Exchange from CoBank. Just go to cobank.com. Another side of this as well, and I know that your colleague Brian Ernest talked about this in the report, the meal side of this equation as well as we expand crush. I know that's another piece to this whole expansion puzzle that really overall it's going to be very interesting to see how all of this plays out. Really, we've been talking about this expansion a couple of years now. It seems like we're just kind of on the cusp of really finding out what this is going to look like here through the rest of this year and into 2025. Right, Tanner?
Yeah, there's a lot to be written here on what's going on, especially with soybean meal. We've been talking about it, as you said, for quite some time. And Brian Ernest, our animal protein analyst, he put his thoughts in the paper about what this means for demand here in the United States. It's been talked about often with all this soybean meal coming onto the market. Obviously, there's a win here for anyone who's an end user of soybean meal in the U.S. Are we going to see a significant increase in domestic usage then? If prices are going to go down for soybean meal, then obviously we would assume then the demand would go up because that's what low prices do. It's going to create demand. Brian is not so optimistic on that. Yeah, we're going to continue to see demand go up, but in the short term here in the next couple of years, he doesn't see a material increase that's going to be taking a lot of that meal off the market. And so we're going to have to find a place for that meal in some other avenue. The first avenue is going to be into the export market. And we already talked about the risks to Argentina and some of their crush capacity coming offline. We're going to be in direct competition with Argentina and other countries for soybean exports, especially into that key Southeast Asian growth market. That's going to be important, sending meal into places like Malaysia and into the Philippines and Vietnam. Those are big growth markets. But here in the United States, there might be some other expansion opportunity that we just don't know about. Some innovative entrepreneur out there might find a use for that soybean meal that we don't know about. That just completely comes out of nowhere. Yeah, we're going to use soybean meal to put in to burn in a car or something. I don't know. I mean, you know what I'm saying? I mean, someone's going to find out when something is in abundance and cheap. Somebody's going to figure out something that we don't know about. Yeah. And so we always have to figure that out. But as it is right now, the animal usage and poultry usage of soybean meal is not going to be increasing enough to take it completely off the market. We've got to move it into the export market, and that's going to be a competitive market for a time. And so it's going to be really going to be have the one on price in order to compete, and that's going to be impacting the crush margin.
Tanner, I'm going to ask this final question. It might be a bit of a loaded crystal ball type question, but considering everything we have going right now with this boom for soybean crush expansion and more, corn has been king in the U.S. for so long. Do you envision that soybeans could maybe take over the top spot from corn, so to speak, here for U.S. growers as we move forward with this? Or is it going to continue to be kind of just that neck and neck type of, corn bean rotations that we typically have been seeing?
Well, this year we'll see that as indicated in the prospective plannings report, where I think most people had anticipated soybeans overtaking corn and other crops this year, which is no surprise. The question is, does this play out in the years ahead? Remember, we talked about veg oil imports coming into the U.S. Okay, markets will be efficient, and to sit here and say soybeans will be the number one planted crop in the United States permanently, I'm not prepared to say that. I can't say that. I think that markets will be efficient. This year, soybeans will have an advantage over corn. I'm not prepared to say that that's going to happen next year, because as we expand soybean acreage, and if weather works out, obviously, and we have a big soybean crop, what happens to soybean prices? Markets will be efficient, Jesse. Yep. Prices will go down. And if we have a lot of corn acres disappear, what's going to happen to corn prices? Corn prices will go up. And that's going to send the market signal next year then for farmers to switch back and start adding more corn acres and replacing soybean acres. So I'm not in this camp that this is a permanent shift. I still think that the flow of imports of vegetable oils in the United States is going to alter this story somewhat. And of course, at the same time, farmers are going to continue to be innovative. Yields are going to continue to improve. Farmers don't want to abandon responsible crop rotations. Crop rotations that are agronomically smart. So you're not going to see a wholesale increase over to soybeans. That's just not good on your soils. So there's a whole lot of factors here that really question this narrative that soybeans are going to be the new king. I'm just not on board with that idea yet.
Read the full report. Rapid expansion of soybean crush capacity risks exceeding growth of renewable diesel online at cobank.com under the Knowledge Exchange tab. Tanner Emke with CoBank. Appreciate the time. Anything final you want to mention or reiterate for folks here before we wrap it up today?
I'd say I hope our report offers a lot of questions to people, or answers to people's questions, but always remember research is ongoing, and there's a lot of questions unanswered, and we're going to keep working on it.
Well, we appreciate the time and the insight. Again, read that full report online at cobank.com under the Knowledge Exchange tab. With that, Lee Grains and Oilseeds economist with CoBank, Tanner Emke. Tanner, always good to chat with you, sir. Thanks for joining us today.
Thanks for having me, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.